So in this case, it's another update from Investor Place, and it basically states this. This was released, of course, yesterday. Weekly update. The crypto consolidation continues, but brighter days are ahead. The past week was yet another volatile week for cryptos, marked by a series of rallies and sell-offs. This past week was yet another volatile week for cryptos, marked by a series of, like we just said, the rallies and sell-offs. Yet, despite all the swings, cryptos ended the week little changed. Um, in that regard, Bitcoin came into the week around 19,500 and ended the week around 19,500. Like, wow, even. So continues the crypto consolidation, which started in mid-June. Now, for the record, I've stated before, I'm cool with this. And you may be the type of person which you're cool with this as well. Why are we cool with this? You may be thinking, I'm new to crypto. Why would you guys be cool with this? Well, I don't understand. Because we base it on history. When there's a lot of consolidation and sideways action when it comes to Bitcoin, there's indicators for the bull run. And I will give props, credit where credit's due. Shout out to the Legrand Commission, who basically, outlined a theory, and now this is kind of starting to add up. I mean, let's face it, let's give credit where credit's due. So this consolidation started in mid-June. It has lasted for 4 months now. During that time, Bitcoin has staged multiple 10% sell-offs and been a victim to multiple 10% drops. Yet through all the volatility, the net price change has been null. In mid-June, Bitcoin was around 19,500. Today, it's just that same level, right? You kind of see what's going on here. I cannot blow it up on that one for some reason. It says, we fully believe, them as an investor place, that the crypto consolidation will persist over the next several weeks as a week, as a week quarter three. Hold on a second. As a week quarter three earnings season weighs on equities. Basically, higher oil prices create fears of reinflation. Crypto investors remain generally risk off. However, we simultaneously believe the crypto consolidation is in its final few innings. Wow. Over the past few weeks, we've offered factors and data points to support the concept of a new boom cycle in 2023 for cryptos. However, today we'd like to focus on a factor which we haven't yet discussed, which is money printing. Ugh, God. The mainstream media has distorted the narrative surrounding Bitcoin over the past few years to describe it as, quote, a hedge against inflation. We always hear that overused concept. But that is actually never what it was intended to be. Yeah, I'm not sure who came up with that concept in the first place, but it's just plain wrong. Yes, thank you, Investor Place. At least we see eye to eye on that. Bitcoin wasn't invented as a hedge against inflation. It was invented as a hedge against money printing. Yes, thank you. Zoom back to the early time of 2009 when Bitcoin was invented. The inflation rate was just 1%. Market-based inflation expectations characterized by 10-year Treasury break-even rates were barely positive. The world had a lot of problems back in 2009. Inflation was not one of them. Why invent a new currency as a hedge against inflation at a time when inflation was at its lowest levels in decades? That's a good point. Now, some people look at it like, well, inflation was high during that time because of the recession and so on. Not necessarily. If you go back, yes, we were in a recession, but it wasn't high inflation. Big difference. Don't believe me? Look into it for yourself. It makes no sense. So forget this whole idea that cryptos were designed to be hedges against inflation. How many times do we hear that over the last couple of years, especially with the last bull run of 2021? They said Bitcoin is a hedge against inflation. It is not. They weren't. They were never designed to be such a thing. Here, of course, is where it was highlighted when Bitcoin was invented, roughly in that area of 2009. Look at it. If you look closely, you will see some of this data right here. I can't blow it up, unfortunately. Said what they were designed to be a hedge against is money printing, because guess what happened back in 2009? Again, the Fed printed a whole bunch of money to save us from a complete economic meltdown on par with the Great Depression. A measure of the money supply in the U.S. economy, dubbed M2, ballooned in 2009. Again, top right, focus on there. says when Bitcoin was invented. All right, a little bit more. The thinking behind the invention of Bitcoin at the time was that with the Fed printing so much money to rescue troubled Wall Street banks, the US dollar would lose its value. After all, if the US dollar can be printed to save banks when they're on the brink, what value does the dollar basically have? And again, we can get back into what? ISO 222. Why did Max deliver this particular message about Bitcoin when the topic is ISO 222? Again, you can see the direct correlation of how this all makes sense. Why aren't we doing more of our own research? We do it for future products and services or projects. Why don't we reflect back on history to give us an idea of not repeating the past? Well, perfect example. Okay. It states Fed printing so much money to rescue troubled Wall Street banks, the US dollar would lose its value. What is going on as we speak? It's not just the US dollar losing its value, right? We are literally seeing the collapse of fiat across the world. And then, there's this thing coming up in November. Again, preparing for November. There's a reason why I bring some of these things to you guys. It's not just because, it's filler time. I mean, in a way it is, but it's also for it to make some sense. And it's just that. So, after all, if the US dollar can be printed to save banks when they're on the brink, what value does the dollar have? In a market where consumers understand that supply of an asset is theoretically infinite, that asset could end up being theoretically worthless. Perfect example, the Ukraine. Seriously, look into it, right? Crypto adoption in Ukraine before the war is 15%. The rest of the world, 45%. Post or during the time of the war, especially at the beginning, like over 50% of the actual people preferred crypto over fiat. If you can't see the value in that, I don't know what to tell you. And that was the whole idea of Bitcoin. More specifically, the whole idea of Bitcoin was to flip that concept on its head, fix the supply of a new currency, make it forever finite, and by extension, make it forever valuable. So let me reiterate this clearly. Bitcoin was invented in 2009, an era defined by very little inflation and a lot of money printing. It wasn't invented to fix inflation. Jeez, they're really trying to get the point across, and rightfully so. It was invented to fix excessive money printing. It is no inflation hedge. It's a money printing hedge. Wow, that's pretty deep. The data bears out that Bitcoin has acted as a magnificent money printing hedge ever since its inception. That is, Bitcoin prices have largely been determined by M2 supply growth rates. Just look at the chart below. We'll get to that. It graphs the M2 supply growth rate laid by year alongside the 200-day moving average of Bitcoin ever since 2015. The two lines correlate most perfectly as I've ever seen in the financial markets. The Bitcoin boom of late 2017 was predicted by a massive increase in M2 money supply. The bust of 2018 was predicted by reversal of the M2 money supply growth. The rebound in Bitcoin in 2019 was predicted by a rebound in M2 money supply growth. The boom in 2020 and 2021 predicted by a boom in M2. The crash in 2022 was predicted by collapse in M2 growth. And I hate to say this. I mean, I should say I hate to say this. But you know what particular person called this? Yeah, Richard Hart. He basically outlined some of the things that are mentioned in this article. Call it as you will. Every major move in Bitcoin over the past 7 years has been predicted by M2 money supply growth. Maybe we should put a little bit more emphasis on that sometimes. Maybe once a month. Who knows? Which means that if you want to know where Bitcoin prices are going next year, all you have to do is look at M2 growth rates this year. If M2 growth rates are rising, Bitcoin is set to soar. If M2 growth rates are falling, Bitcoin is set to decline. Bitcoin isn't a hedge against inflation, like it says, it's a hedge against money printing. Now, it states right here, it's kind of small, but it says M2 money growth late by a year, the blue line, all right? Perfectly correlates to Bitcoin long-term price trends, the white line. Okay, let's take a look at that. And it does. That is correct. In effect, the M2 supply growth rate today determines the Bitcoin price tomorrow. Okay. Now, it says, so where are M2 growth rates going? Okay. Now we're back on par where we should be. They've been collapsing. Crypto winter. Hello. As the Fed has hiked interest rates aggressively in 2022. But empirical data suggests that they are about to reverse course in a big way, paving the path for Bitcoin boom cycle in 2023. Oh gosh. Could Larry be right about February? I don't know. Anyway, M2 growth is historically cyclical because the economy is historically cyclical. Hopefully I pronounced that right. Sorry. Remember, M2 is money supply. The Fed controls money supply. They like to increase money supply when the economy is bad to stimulate activity. They like to decrease money supply when the economy is good to stifle activity. The economy constantly oscillates between good and bad. Therefore, M2 growth also constantly oscillates between rising and falling. M2 growth has been collapsing all year long because the economy got too hot and the Fed is trying to stifle economic activity by decreasing money supply. However, the decrease in money supply has had its intended effects. The economy is now rapidly slowing to a point of being, quote, bad. It reasons then that what happens next is a Fed pivot of sorts towards expanding money supply. Such a pivot around current levels would be consistent with historical norms. And again, like it mentions, M2 supply growth rates have collapsed into what I call, quote, the reversal range, or the range in which M2 growth rates historically tend to bottom and reverse course after a long period of falling. This range is typically between 2% and 5% M2 growth. We are at 4% M2 growth today. Therefore, history suggests that an M2 growth rate reversal is just around the corner. My God. Like you see right here. I know it's going to be a little bit hard to see it maybe, but I'll state it for you. M2 supply growth is getting ready to turn a corner. Like it says right below that, M2 supply growth rates are historically cyclical and they tend to cycle from declining to rising once M2 growth rates plunge into the 2 to 5% range. We are in that range today. My goodness. Meaning that an M2 growth rate reversal is coming soon. Are you freaking kidding? Are you not excited? Are you not entertained? Make freaking Maximus. You know? Where do you think I got my name from? Anyway, I'm kidding. But, in the movie Gladiator, you get my point. The reversal range is outlined here. And again, it feels like it could be right around the corner. I know. You heard the guy state, well, Bitcoin has already dropped below 20K. And from here, it's going to drop to 18K. And if it drops below 18K, it's going to go 12K. How many freaking times have we heard that expression? Is there any solid data to back that up? Or is it more like we should pay more attention to what we see with these M2 supply, growth rates turning around the corner because of what we've seen in history? Again, if crypto is more on the correlation of history repeating itself, which looks like could be the case, I'd rather go with that data than going with the guy who yells out, this is going to tank to 12K. Okay. I'm not saying that it can't, but that's where I'm personally going. So there's a little bit more to this. It says, not to mention the stage is already set for a potential M2 reversal. 2 weeks ago, the Bank of England capitulated on its rate hike campaign and initiated a new M2 expansion program via bond buying. Just this week, the Reserve Bank of Australia capitulated to, which is slowing its rate hike cadence from 50 basis points to 25 basis points. The Polish central bank has followed suit, as well as pausing its rate hike campaign. Now, states it's dovish pivot season. Eventually, the Fed will be forced to pivot, not now, not in November, but signs are emerging from the empirical data to historical standards to falling inflation numbers, to slowing labor market numbers, to pure capitulation trends, to even the UN and IMF warning the Fed not to overdo it. that the pivot will likely happen within the next 3 to 6 months. 3 to 6 months. So right now, as we speak, if we just based it off of 3, all right, we have October 9th, November 9th, December 9th, January 9th. That would be 3. If it ends up being, what's it say, 6 months, February 9th, March 9th, April 9th. Now, here's something I want to pay attention to, okay? And call it conspiracy, call it whatever the heck you want to call it. Here's the thing. There were some videos that were released roughly about a month and a half ago from quote unquote big influencers. One came out with one roughly about an hour away from the last guy. Yes, it's Luna Classic. Yes, if you remember where I'm coming from. One guy mentions how it's going to go to a penny in 200 days. That is basically in April, right around that time I just mentioned. The other one was another quote unquote top influencer who has a lot more subscribers. I'm not going to say his name. You know who he is. We already mentioned it before. And he stated $1 within 200 days. But the point is, they came out with the same type of video the same day within an hour or so. Again, that timeline matches up. Is it because it has to do with the burns and so on? Does it have to do with this darn thing with the this consolidation? Who knows? But the thing is this: what's consistent is what we are seeing on some of these graphs. Call it what you will, call it conspiracy, call it a great big sham. I don't care. But my thing is this: I'm going to base my data on history. And I'm going to base on some of the theories that Legrand mentioned, because you know what? He has some very good points to bring up. Now, let's look right here. Last paragraph. Indeed, given all the pressure building at the current moment, we think a pivot is possible before the end of the year. That means M2 growth rates are going to reverse course and start moving higher in late 2022/early 2023, which sets the stage for a massive Bitcoin breakout in 2023. On that note, we could, of course, dive into the portfolio notes, but guess what? You're going to have to tune in tomorrow for those particular notes. And last but not least, I would love to read the rest of these comments, but my duck sauce awaits. And I love you all, and I hope I didn't miss anything. So with that said, come back tomorrow for more Crypto Talk Now. Greatest darn crypto community out there. Great show tonight. We'll see you on the next one. Over and out for now. Bye-bye.